What's up, YouTube? We are going to talk about Microsoft in this video. First, we're going to go over the financials of Microsoft. We're just going to skim through them real quick because there's nothing too concerning there whatsoever, just solid numbers overall. And then we're going to go over the valuations. We're going to check out valuations on Microsoft and figure out what this company is worth today. And then after that, what we're going to do is we're going to redo these valuations and try to forecast what potentially Microsoft Copilot will do for their revenues going forward. If you don't know what Copilot is, they have their new AI software that's going to be tied in with their 365, their Microsoft 365, and it's really cool. You type in, it's just like if you're going to go on Bing and you use their little Bing icon in the right hand corner and you ask AI a question or two or whatever, and it produces an answer for you. Well, this is a little bit more advanced where you tell it to draft up a proposal for XYZ, or you tell it to make a document of some kind, and it makes you a document real quick without you having to type it all out. It automatically does it for you. So, I mean, it's a super productive time saver, right? I mean, same thing over here within Excel. You tell it to analyze certain numbers, certain criteria, and then it gives you the answers. And then PowerPoint, hey, make me a PowerPoint. It does that too. And then same thing with their email, and you tell it to send a certain email at a certain time or a certain email to certain people, you know what I mean? Or it can auto respond to certain emails as well sometimes. I believe. I think that's a thing that's happening, but it's super cool. Currently, Microsoft is up 1 year, or sorry, over the course of 1 year, Microsoft is up 33%, year to date up 40%. So, all right, so like I said, we're gonna jump into the financials real quick, and then after that, we'll hop over to the valuations, and then after that, we'll redo the valuations and go through um, what Copilot could potentially do for Microsoft. All right, so we're gonna begin over here at the income statement. We're going to be over here on the right-hand side of the sheet where it's 12 months of data versus 3 months. That's how I like to do it. In the revenue section here, our product is down at 9%. Services and other is up 15% with a 7% overall cost or total revenue increase. Our gross margin is 68.5%. And again, I'm just going to skip through these real quick because there's nothing here to. The only real concern was the G&A here. It ticked up 22%, but this increase was a one-time event. It had something to do with, I believe, some sort of legal type deal. One thing down here also I saw was net income. We were basically flat year over year. However, our total revenue was about $13 billion different. So they did not bring down that extra $13 billion. So our net profits went from 37% down to 34%. Something to keep an eye on for sure. Diluted share count went down by about 70 million. Balance sheet, our cash and cash equivalents increased by about 7 billion. Overall, we have $111 billion in cash and short-term investments. Solid control of inventories. Inventories are down about 1.2 billion. We had overall a $47 billion increase on total assets. Majority of that is in plant property and equipment, and then our increase in cash and cash equivalents and a little bit of accounts receivable increase as well. Overall debt section looking pretty good. There's only a 7.5 billion increase, mostly from deferred revenues. So that's not even really much of a debt. That's just unearned income at the moment. We had a very nice increase on retained earnings. We went from 84 billion up to 119 billion. Our stockholder equity increased by about $40 billion as well. On the cash flow statement, here's our net income. Stock-based comp, we still kind of have a lot of stock-based comp over at this company, but you'll see that that gets offset. All these changes here are all going to be on your assets and liability, your balance sheet. They issued more stock. However, they bought back $22 billion worth of stock. So your 9 billion plus your 12 or your 1.8 billion gives you 11.8 billion in dilution, but they bought back $22 billion worth, and now there is only $11 billion. The net change was a decrease of $11 billion worth of shares. So Overall, their cash used in financing down 44 billion. They used 22 billion dollars in investing. Also to note, their cash from operations was 87.5 billion. Their capex 28 billion gives them a free cash flow annualized of 59.4 billion dollars. Overall, they brought $20 billion down. Their beginning balance was 14 billion. Now their new balance of cash and cash equivalents is 34.7 billion dollars. So, no real big changes over here at Microsoft. All right, over here on the valuation spreadsheet for Microsoft, our total valuation is our market cap is $2.5 trillion. We have a dividend yield of 81.81, return on equity 38%, return on invested capital 55%. Very good, very good. Gross margin 69%, operating margin 41.7%, profit margin 34%. Analysts have a price target of $372 per share, and our revenue growth rate of 12%, earnings per share growth rate of 17%. Peter Lynch valuation $164.66. Our multiples comparison gives us $510 per share based on our competition. Our manual PE gives us 29.6. It would take 29.6 years for Microsoft to earn its current market cap. Our price to book is flat year over year, just flat based on a 5-year average. Our PEG ratio, very richly valued today at 2.55 with a forward PEG at 1.95, which is actually not too bad. I gave them a 1 based on their growth rate. Intrinsic value $212 per share. Our weighted average cost of capital is 7.91. So this is our DCF valuation. Our growth rate I put in there for 10%. Analysts have a growth rate of 7.5. Previous growth rate was 13.6, so I just split it down the middle. We can see our free cash flow growth here is went from 32 to 38 to 45, 56, 65, 59. So overall, except for this here, very, very consistent, steady growing free cash flow, which is awesome. Put in our cash and marketable securities. We have a discounted cash flow price tag of $195 per share. Rule 72. I got our EPS of 968, current P 347. Our lowest EPS growth rate was 13.4, so I put 13.4 here. 13.4 goes into 72 5 times. 5 goes into 10 years, 1.86 times. 1.86 times is how many times we're going to double our earnings per share. So we're going to double it one time and then just shy of 2, which I put in 35 for our future EPS with a fair value of $234.50, 30% margin safety, $164. So we can see here, over here at our summary, we get an average price tag of $263 per share. Okay, and analysts have a price tag of $372 per share. So what we're going to do now is go through the Copilot stuff. So on this Copilot, we have 2 assumptions written out here. Assumption 1 is where we get every single 345 million subscriber of 365 to sign up for Copilot, which Copilot costs $30 per month per user. If that was the case, that would give us about $30 billion in added revenue per quarter, which would be a 53% increase to its revenue. So let's say 40% of that goes down to the bottom line because it obviously is going to cost something for this company to run this software. What that cost is yet, we don't know. Is it 40%? Is it 20%? Is it 80% of the revenue? So we're going to say let's say it costs 60% basically to run this AI. That would be a 60% increase to net income. So our future EPS could be 428 quarter over quarter or 17 annually. So our EPS would be 17. So our forward PE based on current trading levels and assuming a 40% net margin on Copilot would give us around 19.6 PE today. With an average growth rate today of 13%, that would give us a forward-looking PEG of 1.44, and that's very cheap for a company like Microsoft. So currently, Microsoft is trading for a 35x, and Microsoft never in the last 5 years has never traded below 22 times earnings. So based on PE alone, and if numbers above are close, we could see a price on Microsoft around $420 per share at 24 times, or $500 per share at 29 times. So based on those numbers real quick, and this is complete speculation because we don't have actual numbers to back this up. We don't know what it's going to cost to run this AI software. So if it costs them, if they're going to make $30, but it's going to cost them 16 or to $18 of their total revenues, then they make $12, of actual net income. You know, we don't know, right? So then I placed another different type of scenario here, one based off of only if 50% of people use this program, right? If only 50% of users use Copilot, the numbers are a little different, but that would be $5 billion in revenue each month, or $15 billion per quarter, which makes sense since we just had 13 billion or 30 billion. So that would increase annual revs by 29%. And this is assuming 50% of users purchase this. The only thing we don't know is the cost of Copilot. How much of that revenue will flow down to the net income? So in this instance, I used 50% instead of 40%, and that would be a 42% increase to current net income. So this would give us an EPS of 13.65 or a PE today of 24.61. And obviously, remember that Microsoft has not traded below 22 times earnings in the last 5 years. So we'd be right at the bottom of that range. So if we are going to go back up to 29, a PE of 29, the price tag on Microsoft would be around $400 per share, and analysts have the price tag on Microsoft or future earnings or future price of $372 per share. I believe that maybe the 50% of users is more what they're maybe basing their numbers off of. But we can also see if 100% of users used Copilot, what it could potentially do for this company. It could be a $500 per share company, possibly. So if we plug in the numbers of the 50% added users to Copilot, remember we had a EPS at 50% of 13.65 and a PE of 24.61. So if we do that, this changes the Peter Lynch fair value of $232 per share. Our multiples now is worth $720 per share. Our PEG ratio, this one will be incorrect, but our PEG today would then be 1.81. It gives us an intrinsic value of $300 per share. So the DCF, let's pretend that our cash flow, our free cash flow grows 25% year over year. Maybe that's a thing with how much added net income this could give us, that it increases our cash flow year over year substantially to 25%. It was at 10%. So I mean, not unrealistic, I don't think. But let's do 25%, and that gives us a DCF price tag of $407 per share. Our future market value, we got Rule 72. We have our ticker, or sorry, earnings per share 13.65, current PE 24.61, and I'm sticking with a growth rate of 13% on EPS. It's probably gonna be more. That gives us a $335 price tag, 30% margin safety, $232. So we put all of our equations together. It gives us an average price of $400 per share, which is exactly what we just said was going to be. And I just ran these numbers. I literally didn't know that. So that gives us an average price tag of $398 per share based on a 50% added user growth. So I'm gonna pause the video. I'm going to do 100% added user growth and see what the number comes out to be. All right, so I got the numbers punched in here. So we have our EPS if we get basically 345 subscribers to Microsoft Copilot. EPS would be 17.14. We have a PE ratio of 19.6, which gives us a Peter Lynch fair value of $291 per share. A multiples comparison of $900. A PEG ratio of 144, which we already calculated out. Intrinsic value of $376. DCF, I did not change. I kept it at 25%. Could be higher, but we'll stick with 25%. Gives us $407 per share. Rule 72 is fair value of $415, a purchase price of $290 per share, which gives us an average price tag of $479 per share with a 30% margin of safety of 335, which is exactly where it's trading today. But this is obviously forward looking by maybe a year, 2 years, not sure. But that kind of gives you an idea of where Microsoft could be headed, and probably relatively quickly. And that's not to say there's not going to be some hype behind it too, where this thing might not punch above $500 per share. So this might be the next $3 trillion company. Yeah, I like it. I like it a lot. I like the future of what this company has in the next 12 to 24 months, in my opinion. So as long as they, depending on when they come out with this Copilot and release it to everybody, I'm curious to see how well it's gonna perform. So Microsoft currently is in this nice clean uptrend. We can see in the shorter term, we had a nice just rally just from lows to highs. And right now we looks appears to be back testing this trend line. And we're sitting right at resistance point too at $338 per share. So right now Microsoft, I mean, it's very bullish. There's no doubt about it. There's a lot of good news behind it. I would not be surprised if it just continues and just run on the backslide of this upward trend line, right? So it just kind of just chops around, continues higher, makes eventually all-time new highs. And yeah, I mean, I just don't see a thing not to like on Microsoft, even with its future revenue potential right now, since we actually have numbers to back up what our forecast could be on Microsoft. I think there's a good chance that Microsoft continues to push higher and will eventually hit that $372 price tag that analysts have. Um, personally, I think there's more in it than that. Obviously, I'm going to stay conservative, but I do believe that Microsoft could definitely be a potential $500 company in the future, especially once AI starts taking off. But that's my take on Microsoft. If you guys found value in this video, drop a like, subscribe, and we'll be back later with another stock analysis video.